Hello everyone, welcome to Iraqi Dinar News, where you receive real and authentic updates about the Iraqi dinar. In today's update, we're taking a closer look at the latest developments surrounding the Iraqi dinar and the Vietnamese dong, two currencies that frequently attract global attention, particularly among retail investors who are watching emerging markets for potential long-term opportunities. Rather than speculation or hype, this report focuses on real economic signals, exchange rate trends, and what these developments actually mean in practical terms. Let's begin by understanding the current position of both currencies in the global financial system. The Iraqi dinar remains a managed currency, meaning its value is largely influenced by the Central Bank of Iraq through a controlled exchange rate system. Over recent years, Iraq has been working to stabilize its currency, following periods of volatility caused by political uncertainty, oil price fluctuations, and structural economic challenges. On the other hand, the Vietnamese dong operates under a different model. Vietnam uses a more flexible exchange rate mechanism where the currency is managed, but allowed to fluctuate within a certain band against major global currencies, particularly the US dollar. Recent updates indicate that both currencies are maintaining relative stability against the US dollar, which continues to act as the global benchmark. The Iraqi dinar has shown consistency due to strong oil revenues, which remain the backbone of Iraq's economy. With oil exports contributing the majority of government income, stable or rising oil prices tend to support the dinar by strengthening foreign reserves. In contrast, the Vietnamese dong stability is largely supported by Vietnam's export-driven economy, which has been growing steadily due to manufacturing, foreign investment, and trade agreements. Now, when we talk about exchange rates between the Iraqi dinar and the Vietnamese dong, it's important to understand that this is not a commonly traded pair in international forex markets. Instead, both currencies are typically measured against the US dollar. Any comparison between the dinar and the dong is therefore indirect based on how each performs relative to the dollar. Recent data suggests that neither currency has experienced any sudden or dramatic revaluation. This is a key point that needs to be emphasized. Despite ongoing discussions in online communities, there is currently no official confirmation or credible economic signal indicating an overnight or abrupt increase in value for either currency. Both Iraq and Vietnam continue to follow gradual, policy-driven approaches to currency management, focusing on stability rather than sharp appreciation. From a short-term perspective, the Iraqi dinar is expected to remain within its current range, supported by Iraq's foreign currency reserves and steady oil exports. The Central Bank of Iraq has taken steps to modernize its banking system, improve transparency, and reduce reliance on the parallel market. These reforms are important because they build confidence in the financial system, which is a necessary condition for any long-term strengthening of the currency. At the same time, Iraq faces ongoing challenges that could limit rapid currency appreciation. These include political uncertainty, infrastructure gaps, and dependence on a single commodity, oil. While there have been efforts to diversify the economy, progress remains gradual. This means that while the dinar may strengthen over time, under favorable conditions, any movement is likely to be slow and tied to broader economic reforms rather than sudden policy shifts. Turning to the Vietnamese dong, the outlook is somewhat different, but equally grounded in gradual progress. Vietnam's economy has been one of the fastest growing in Southeast Asia, driven by manufacturing exports, foreign direct investment, and integration into global supply chains. This consistent growth has helped maintain stability in the dong even as global markets face uncertainty. However, Vietnam also manages its currency carefully to remain competitive in international trade. A significantly stronger dong could make exports more expensive, which might impact economic growth. As a result, The Vietnamese government and central bank tend to favor a stable and moderately valued currency, rather than aggressive appreciation. In terms of short-term implications, both currencies are likely to continue their current trajectories. For the Iraqi dinar, this means stability with potential for gradual improvement if oil revenues remain strong and reforms continue. For the Vietnamese dong, it means steady performance aligned with economic growth and export competitiveness. Looking at the long-term perspective, the outlook becomes more nuanced. For the Iraqi dinar, long-term strength depends heavily on structural reforms. These include diversifying the economy beyond oil, strengthening financial institutions, improving governance, and attracting foreign investment. If these areas see meaningful progress, the dinar could gradually gain value over time. However, this is a process that typically unfolds over years, not months. For the Vietnamese dong, long-term prospects are closely tied to Vietnam's continued economic expansion and its ability to move up the value chain in global manufacturing. As wages rise and the economy evolves, Vietnam may shift toward higher value industries, which could support a stronger currency in the long run. However, as mentioned earlier, policymakers are likely to balance currency strength with export competitiveness. It's also important to address a common misconception among some investors that currencies like the Iraqi dinar or Vietnamese dong could suddenly experience massive revaluations, leading to significant gains. In reality, such events are extremely rare and usually tied to extraordinary economic transformations or policy decisions, often accompanied by major risks. Historical examples show that currency appreciation tends to be gradual and closely linked to measurable economic improvements. Another factor to consider is global economic conditions. Both Iraq and Vietnam operate within the broader context of the global economy. Changes in U.S. monetary policy, fluctuations in commodity prices, geopolitical developments, and shifts in global trade can all influence their currencies. For instance, a stronger U.S. dollar can put pressure on emerging market currencies, while global economic growth can support exports and strengthen local currencies. For Iraqi dinar followers, the key takeaway is to focus on real indicators such as oil prices, government reforms, foreign reserves, and monetary policy decisions. These factors provide a more reliable picture of where the currency might be heading. Similarly, for those watching the Vietnamese dong, important indicators include export performance, foreign investment, and economic growth rates. In practical terms, neither currency currently shows signs of a sudden or dramatic shift in exchange rate policy. Instead, both are moving within controlled frameworks designed to ensure stability and support economic growth. This stability is not a negative sign. In fact, it reflects disciplined monetary management and a focus on long-term economic health. As we move forward, it will be important to monitor official statements from central banks, economic data releases, and global market trends. These sources provide the most accurate and up-to-date information, helping investors and observers make informed decisions based on facts rather than speculation. To summarize, the latest news surrounding the Iraqi dinar and Vietnamese dong points to continued stability rather than sudden change. Both currencies are supported by their respective economic fundamentals, with Iraq relying on oil revenues and ongoing reforms, and Vietnam benefiting from strong exports and steady growth. Short-term movements are likely to remain limited, while long-term trends will depend on broader economic developments and policy decisions. For viewers following the Iraqi dinar, it's essential to approach the topic with a balanced and informed perspective. Currency markets are complex, and meaningful changes typically occur over extended periods. Staying informed through credible sources and understanding the underlying economic factors can provide a clearer and more realistic view of potential outcomes. Thank you for watching Iraqi Dinar News. If you want to stay updated with responsible, factual, and in-depth analysis, make sure to subscribe to the channel and like the video. And as always, remember that this content is for informational purposes only and should not be considered financial advice.